Welcome to Trading Lounge and the Australian report for the 1st of September. So today we're going to look at pretty much a bearish count, but before I look at the bearish count, we just want to have a look at this bullish count here. So just on this low here of wave 4 here, looking at this as 1 and 2 here, and 3, 4 and 5 here for 1 here, an A wave here, an A and a B and a C wave here for wave B, and then 5 waves down here for wave C of 2 here, and this is the 50-60% retracement level on this level here. Now if this is the case, then we probably see another little move down through here as the cash market opens today, but then we would need to see this build up here and continue to the upside. Just to give you a bit of an idea of that, if you look at this wave 4 here, and I'm just going to have a look at the Nikkei here, for example. This is a way to count the Nikkei here, and we could put, I've got the Australian wave 3 sitting here, but we could also put it here as well, and it's probably a better fit. It's just that I had an extra wave in here, so it left me scratching my head a little bit. But besides that, this wave 4 here, looking for wave 5 here, so it has made, maybe it's made a new high here, maybe it hasn't, a bit like Australia. Well, in fact, Australia has made, that is the high for Australia. Now, that's the high over that high and that high for Australia. Now I can see we've got 5 waves up here. So is this wave 1 here and back for wave 2 and then we move up from that point? Or do we bring wave 5 all the way down here and that's the end of it here, just a short wave 5? That's what I don't know. I don't know it for the Nikkei and I don't know it for the Australian market. So that's what sort of I'm toying with at the moment. So this market has kept to its, its 61.8% mark, but would need Australia to pull up from that, from this current low of its wave 2 here. So just going back to that now, that's the wave 4 here, looking at wave 1 here, an A and a B and a C here. Pretty complicated really for a wave 2, I have to say. So it doesn't hold much water, but it would be the last sort of, well, probably not the last call, but at this level, at the 6,000, it would be the last like possible positive wave count to the upside at this point. So we really need to take this on board because we could get trapped going short here. So if we decided to go short under the 6,000 here, and we'll talk about that a little bit later on, then we would just make it a small position here and then look to build back in a bit later. Even as a bear market here, if that 5 waves is completed here or even got down a little bit further, we would still see a little corrective rally here before we went down again, because we'd have to look at this. I wouldn't count this as 5 waves down because this wave 4 here is overlapped wave 1 here. So I would look at this in a slightly different way of down for 1, back for 2, down for 1, back for 2, down for 1, back for 2, and then down again from that point. So we've got the rest of the week to see if we get more bearish moves in here to play it short. But this is really the last sort of place that I could call this market bullish. Now, in terms of looking at it in a bearish light, what I'll do is I'll just go to the weekly chart first and have a look at the bigger picture as such. So we've had the COVID move down, and this particular move to the upside here, that's pretty much the high one on the when I'm looking for highs here, I take it off the cash market of the XJO. But the takeaway here is that this was our target to the downside. This was our target to the upside. We've reached it. The market is struggling at that point. And looking at, the S&P 500, the Nasdaq has made new highs above here. So some of our stocks have as well. But the main point of all of these, except this move up through here, has been in 5 waves. Now, our resource sector has given us a nice clear 5 waves, our banking sector hasn't really given us 5 waves to the upside. Well, it has with CBA, but not with WBC or the rest of them. So we'll have a look at those right now, actually. So let me just get a few things together here for a moment. Well, the XMJ is really the one that we want to have a look at. Now, to me, this is quite a clean count here, and I'm comfortable with it, right? So we've got wave 1 and 2 and 3 and 4, and then 5 waves in the 5th wave here. Then we've got an A wave, a B wave, and a C wave here. So we can look at this as wave 1 here for this. And wave 2 would be the pullback there, which is pulled back nicely in this space here. And then we've got wave 3 here. So just while we're here, just with this is the Trading Levels charting program. I use Just Data for my data for this, and it just plugs in nicely. But I have found a data source which is under $100 and it's like a data downloader, and it pulls it from different places. It can pull it from Yahoo, and I used to have free Yahoo data in here, but they made it more complicated. So I've been talking to a gentleman, and he's got this data downloader that can pull FX, indices, stocks for Australia and other countries and so on. So I'm going to put that on the website. It's under $100. I think it might even be 60 or something. I can't remember. But I'm going to download it and test it and all those sort of things. And put it on the site there. So if you want to use the Trading Levels charting program, then you can use this particular data downloader that I'll have, and look, it'll be under $100, and you've got it basically for life, really. So but it's not managed data. It'll be data from Yahoo and all those sorts of things, you know, BATs and so on and so on. But anyway, it could be a little bit helpful because, you know, at least with this charting program, it's free for you, and you can do your Elliott counting, and it's not saving at the moment. These labels aren't saving correctly when I go to save it, so I need to get the IT guys onto that. But I'm still working on the accounting program. Anyway, back to this is that it's a very clear count here of 1, 2, 3, 4, 5 for 3 and 4 here, and this is probably 1 and 2 in here somewhere, but this is definitely the 3rd wave here, the 4th and the 5th. So we didn't have any problems getting this, and we got this in in Rio and BHP and so on. So this is the material sector, and we've got 5 waves up here. So that really makes this here, we could look at this as wave 1 here, or wave A up here for this. Such here, and then we would look at this as wave 2 coming back here, and we would see that in 5 waves. So just get our fib tool here and put this on here. So this is really where this market could come back to, you know. I mean, the RBA are, you know, suggesting that property prices can drop and all this sort of stuff, and so that and this wave count, the news comes and fits the count, as you know. It's not the other way around. So this market can pull back now, you know. So that's, yeah, I mean, I still see the US markets going higher, but our market and the US market don't have to do the same things. They're not pumping money into the system, so to speak, into the markets anyway, at retail level. So, but this has started to move down now, you know. That's the thing. The banking sector, the XXJ is this one here. So most of our banks have done this 3-wave. They've got 3 waves up here, except for the Combank. If I just bring that up here for a moment, that's got 5 waves up. It's got 1 and 2 and 3 and 4 and 5 up. So, but the other banks never really made it above this high here. All of this had pull back down here. So it's made them look corrective in a way. So this is our banking sector here. But I have to say that this move down through here doesn't look really impulsive at this stage. There's different ways to count this. I could count this down for 1 here, and then look at this as an A and a B and a C wave here for that, and then we just drop from this point here for these. So we can see that the 5400 is a nice resistance at this point here. So it does put the banks in a bit of a shorting opportunity here, but it's not like that. It's not like that we've got a nice 5 waves down like this, and now we're looking at the rally here, and then another 5 down after that. We're not looking at that. This is, we could probably even look at this as a truncated 5th wave here, really. And an A and a B and a C wave coming down here further. So I don't really understand this one here just yet, because when I say I understand it, yes, I can see that we've got an A and a B and a C wave here. I see that CommBank has made another high here to got 5 waves up as such. And all of this here, so if we look at this, if this market was going to drop, the first sort of target area that we need to look at is this 50-60% retracement level here, spiking down into from the 5,000 into the 4.8 area through here. But it may only be a corrective wave here. So we see this coming up here and then coming back, well, basically coming back to the 61.8% mark here, and then moving up here again in that case, But having 3, because CommBank has got 5 waves up. So this has got 3. If CommBank only had 3 waves up, well, then I would suggest that all this is a corrective move here, and then would come down lower here below this low here, and that's still possible as well. But also have to say too, with all the banks summed up here, you can see that the market now has found this level here as the resistance, and it's rejecting it, and so it is the time to look at short trades for this. If I just have a look at CBA for a moment while we've got it here, I know that we had 5 waves down to here, so it never rallied back up, but it had its little corrective moves in here, and it will probably move down further. So this would be the time to look to short it at this stage, because we've got the US markets pulling back into a wave 4 at this stage as well. Let me just have a look at ANZ for this as well. We just have a little look here. The ANZ's still perky. It's still got, I mean, this doesn't look impulsive to the downside. It looks corrective to the downside, and this is corrective in here. This is not impulsive, so we can come down from this point. Okay, we'll just go back a bit now. So yeah, and as I've mentioned before, we've looked at, where's BHP, and find BHP here for a moment. I know we've been over this. Sorry for rabbiting on too much. So with BHP here, we've got those 5 waves up like we looked at with the material sector, and Rio's the same as well. And as I've mentioned, it does appear that we've got the 5 waves down here. So we won't short the resources just yet, because this 5 waves here really needs to bounce back here a little bit. So we'll probably get that bounce off the 38 there, hopefully, and then we can look to short that lower at that point. Now, one of the things that we need to work out here is that, do we call this the A wave here, and then any little rally in here, the B wave, and then the C wave coming in here and not pulling all the way back down through here as well. So that's something that we've got to work out, because otherwise, if the bigger picture here would be having this down here as wave 1 here, back for 2, 3, 4, and 5 here. Clean these up here. I mean, this should be the normal path of this particular. So then this becomes the A wave here, and then we look for the B wave up here in 3 waves, and then down here for the C wave in 5 waves. That's what it should look like in this case. But I don't know that just yet. I don't know that just yet for this, so we just need to be a bit careful. So we either get the 5 waves down here, and this would be the place to short, but we do want to see a bit of a rally first, and then we can short under that or short back up in this space here. Or we're going to see this is the A wave here, the B wave here, and the C wave down here, and then we push up from that point. That's what I don't know here. It doesn't, a lot of the time the wave 2 can just come back to the wave 4 here where the support is. So it's something that we need to be mindful of, especially if you're shorting this. But the good news is that because we've got 5 waves up here, that means that after a correction, either be it this smaller version here or the bigger version here, then we're going to have another 5 waves up. So this is the real, this wave from wave 2 here to wave 3 here, that's the real opportunity with all of that. So we don't know if it's in there or there. That's what I don't know at this stage. So the ASX has been following the materials sector more so than the banking sector. So this is probably where we are at this stage here, with the ASX also moving lower in this space. So with this in mind here, we can see that it's really toppy here as well, can't we? So now we can look on the short side for this now that I've explained a few things. So this is how it sort of looks here at this point. Now on the XJO, the cash market, that's the actual high right here, only by a few points, but that's it. Now, yes, I know that with other markets we could copy this and put this wave 3 here, but the reason I haven't done that for is because from this low I've counted a nice 5 waves up here, and I've had this extra wave in here. So I don't get triangles in wave 2, so that's why I haven't labelled it like that. So I don't know what's the right thing to do here with this. It's been a bit of a tricky one. And this market always, has quite, well, for me, always has quite a few tricky things. So yeah, we're seeing BHP, Rio. We've looked at the XMJ, which this market's following. They've all got a very clear 5 wave structure to the upside, and we're looking for them to pull back. And with those markets, this is the first little leg to the downside here. We may get a little move to the upside, and we may see something like this 5 waves down, 3 waves back up for a rally, and then another 5 waves down here for this, so to speak, and then up from that point. So I don't know how this is going to play out here. I don't know if we're just going to have a smaller correction or not in this space, but it does appear that we have started this to the downside here for this. So based on that, we'll go in and have a closer look for this now. So that's what we were looking at for the 4-hour chart, so we don't need to look at that. But on the 1-hour chart here, this is also what I don't know as well, is still haven't gotten rid of that. So this is clear to me. We've got 1, 2, 3, 4, 5 here, and 1 and 2 here. So that's good. It's just that this pulled back up too far for a wave 4 here. So that's why I've labelled it down for 1 and back for 2 here. So if that's the case, what we also need to look at here in this space here as well is that this market can rally. I'll just use this one, rally back up into this space here for that. This is kind of important to know here for this, because that's where we can keep our stops above that space there. But the other thing is that if we do count this down as 1 and 2 and 3 and 4 and 5 here, well then today, because what did the markets close at? Let me just check what the S&P closed out. The Nasdaq is still quite firm, so only down a little bit in the 0.2% on the SPX. So we don't need to come down too much. We're a bit softer on the cash market, on the banks and all the rest of it. So we may have another little move down, but we can either go back to here and then drop from that point, or we can come, I'll do this again, come down here and have an A and a B and a C wave, which will take us back to this high here. We can make adjustments for these. I just need to look at all the scenarios, and you might as well be with me on this. So and then down from that point. I just don't know which is the right one. I don't think it's going to hurt though. I mean, if you're an intraday trader, well then this doesn't sort of interest you at all. But if you're holding out for the trend, and what we've just seen at this point, we've seen BHP basically move down to this point here. So when we have a look at BHP again here, just for a moment, I can see that we've got 1, 2 here and 3 here and 4 here and coming down for 5. It's not that clear, but I can see we've got 1 and 2 here. We've got this third wave down here somewhere. One of these is a fourth wave here and a fifth wave here for this, right? So we'd be looking for a bit of a rally to go back up here. It may drop a bit further and then have a bit of a rally, but in the length of all of this, we're at the very later stages of it here. Can we see it on the tick chart? Just let me have a look at this. So with this, we've got 1 and 2 here, and all of this is third. So that must be part of the third, fourth, and fifth here. I mean, if you're still shorting this, that's good, but we can also look to copy that short under here for this as well. I need to pull that apart. Let me see. I need to spend some time on it to pull all this apart in here. But if this was going to rally at this stage, then we would see it rally back up into this area through here, this space. So if that's something that you can hold, then that's good. This is definitely panning out as an impulse wave to the downside. So that's all good. I suppose shorting this point here would be okay. And also I think in a general sense as well, wherever this opens and does whatever it does here, what you could work out, this number here, the 38, this is the really important one. If once this becomes a really, once the market's trading down here and you can see that it's tested it and it's like, then you know that you're on your way to the downside at that particular point. But what I'm trying to do here, that was the 11th of August there. So 11th of August, that's way back over here, isn't it? That's at this high over here. That's way over here. So this is lagging here. So yeah, I can't bring them into the same here. So I guess what we could do here as well is that we could look to short here, half a position here, but you must be willing to hold onto it for a while. So we'll just, even if it moves back up into this one or this one here. I mean, the 100 here was the support, yeah, and this has come down and it's tested that 100 and failed at that point. So I don't think it needs to go back to that space, but it may go back to the 50. So that's where we need to hold it from, and stops would need to be above the 100 here at this stage. It's quite difficult actually trading through the beginning of a trend as wave 1s and 2s unless you just leave the stop above the tops here. So looking in a bit of a nutshell here, what we're actually looking for is the 6,000 to really become the retested resistance. And if this moves back up here and then drops down again, that's fantastic, because then you'll put in a full trade on that one on this one here. Okay, if it does that, if it comes back up here and meets that and fails at that point and drops down again, because what we're looking for is just a really nice secure resistance at this 6,000 here. All right, I'll leave it at that. I've waffled on too much, but yeah, that's my thoughts anyway. All righty.